So both markets are below 50-day and 200-day, and that the death cross is going to happen probably in the next 2 weeks. And then you're looking at a long weekend, July holiday, July the 1st, and also the July contracts rollover on June the 28th and 29th. So you could potentially see a washout, a climax, a correction in a panic selling sort of within the next 10 days.
Buy your gold and silver at SD Bullion. Right now, new customers get gold or silver at spot by visiting sdbullion.com/new. Hey everybody, Smart Silver Stacker here. Hope you're doing well. I'm very excited to get a chance today to speak with John Lee. He's a chartered financial analyst and the CEO of Silver Elephant Mining Corp. But to add some context to our conversation today, it's been about a year since I spoke with John. I last had him on the channel back in July of 2025. And at that time, silver price was trading right around $36. And John's forecast for 2025 was that we would see $70 silver. Now, a quick recap for those of you who aren't familiar with the price action last year. Following that conversation, we went on to see silver rally to a high of $83, and then it closed the year at $71.60. So that was a fairly prescient forecast. You nailed it to within $1.60 of the closing price. So I'm very excited to get an update from John Lee today. Certainly 2026 has been a roller coaster ride for gold, silver, the precious metals markets, just markets in general. So welcome back to the channel, John. Really excited to get a chance to speak with you again today.
Happy to be back, but you can also add the title of Gold Bug to my bio. I've been following silver for more than 20 years. The likes of David Morgan are a very good friend of mine. And that interview that we had was July 11 months ago. Not only would I forecast the $7 silver price, but recall that I was pounding my fist and pounding my chest, saying, buy now, back up the truck. It was the absolute best time to buy at 36. Right then, exactly the time that we talked, then to say I bought it at 34 the month prior. And everything has come to fruition.
It has, yeah. That rally really, shortly after that conversation, just silver began moving up. And I mean, it was, as always with silver, a volatile ride, but more than doubled by year end. So, yeah, congratulations to anybody who watched that and, took the hint and did some stacking. I know I was stacking at those prices, and I'm certainly glad that I did. And of course, silver went on in January to top out over $120. However, since that peak, which some might describe as a bit of a blow-off top, silver and gold have entered a corrective phase. So right now, we've got silver trading around $62 this morning, gold around 4,137 at the time we're recording this video. So I'd like to hear your comments, John, on the corrective phase, and if you see a bottom anywhere in our future for silver and gold, where that might be, and if you believe silver and gold's bull market has not exhausted itself, how you might see that proceeding forward.
Oh, that's a back four. That's a back full. To answer your question first, is I see silver consolidate at around $50 to around $85. The silver exhibited weaker strength than I had hoped for, and it's important, if I can, to dissect what happened in the last 12 months. I think it's important to understand at least where we came from and how the price action came about. And looking in hindsight, you can collect additional data points, right, to sort of figure out why, how, and when, and how everything came about, and who are the buyers. Most importantly, who are the buyers and who are the sellers, and who were and who will be, who are. So therefore, recall the Zoom the session we had back in July. One of the question was, well, first question was the silver $70 target, which I prophesized, and then secondly, the question was, what was driving the silver market? A lot of people say it's inflation. I dispel that number, but rather I said it was the digital currency, the micro mandates, and the 2030 agenda of central bank digital currency. I think it turned out in hindsight, my view was that when Trump was elected, that going to Venezuela, Iran, and Cuba were the bargaining chips that he had bargained with the devil per se, or the power that be, to get him into the White House. And the reason I speculated on that was, maybe I had to mention it before, back in July last year. I think everybody was dumbfounded on the action of gold. Gold went from 1,800 all the way to 5,400 in less than 2.5 years, from 2024 to 2026 in less, just over 2 years. Went from 1,800 and past the 1,800 handle. I said my target for gold was 25 to 2,800 on a linear scale, and on a 3,300 to 3,500 on the log scale. So it went past 2,800 in like less than 9 months after 1,800 was taken out, and then it went to 3,500, and then 6 months later it went to 5,500. So it was so the action really was taking me by surprise, to say the least, because there's no war, there's no outright inflation, things are sort of carrying on as usual, and it turns out that some people had advanced knowledge of this insidious plan of going after these three countries. And what happened to silver the silver was, as you recall, your audience, I'm sure, can recall clearly that silver was underperforming all along. So even the silver bucks were wondering what the hell is going on. I think it was like gold was like 3,500 and silver, yes, still 33. I said, well, by all measures, silver would have been over 50 already at $35 at $3,500 gold, and at $4,000 gold, silver still struggled to overcome 50. And that's why I came to this conclusion that the people who were buying gold had advanced knowledge, maybe central banks and the Jeff Bezos, the camps, and then they moved to gold because gold had the liquidity to absorb the wealth. And then last year in June, people fill up on gold and they say, you know what, I built my position, and some of the early people that had cashed out in gold sort of dangle a little bit into silver, and that's why silver had that run from 35 to around 80, and towards the end of the year at around 70 to 80. What happened then? Again, this is based on my personal observations, and take it for what it's worth, is that after it was 80, I was saying, you know what, my target is reached. What happened then is cartel then came in to try to manufacture a top and to try to fend off the market. So from 80 to 110, I think it was like done in like 3 days. And so cartel was actually actively fueling the market. So it was a time where gold was nonchalant, and there was nothing. There's not some events, and the dollar was steady, and all you see was silver just being jacked up. So the cartels were actually via the futures market and ETF buying up volumes from 70 to 80 to 90 to 100, 110 to 115, and then subsequently whacked the market from 115 to 70 to around low 80s. So therefore, that created the FOMO, right? And so people who had watched the tape say, well, it was 115, so 90 got to be cheap, and it was 100, and 80's got to be cheap. And then so the roller coaster all the way down from 80, and they probably mortgaged their house, and they bought more on 80, and they went to 70, and then went to 60. So I think in a normal market, when the bids and asks were in a normalized market, you wouldn't have a market that got whacked from 115 to 80, lost nearly 50% in one session. And in that session, you also saw unprecedented historical volume of 370,000 contract traded, I believe. So that's equivalent to 1.5 billion ounces of silver. So that's almost the annual mine production of silver is around 800 million ounces, plus about 200 million ounces of recycle. So the total volume is 1.5 times the annual supply of silver, and it's almost double the mine output, annual mine output. And subsequently, what we saw was a massive drop of the silver volume, and silver has been in that doldrum along with gold. I think that's sort of where we are, and we can talk about if you like. We can talk about where I think silver is going from here, or if you have comments, I'm happy to answer questions.
Yeah, so I would certainly be interested to hear your take on where silver is headed, but just to kind of reinforce your comment there about that one-day move, Friday, January 30th, where we saw silver decline in one session from open to close about $30. It's pretty remarkable when you think about that day when, since 1971 in the current fiat era, for the vast majority of that time, silver has traded under the $50 level. So the decline that we saw in that day was almost equivalent to the entire market cap of silver for a long time, right? I mean, it dropped by $30. Last time we spoke, silver was trading at $36. So yeah, that was quite remarkable. Certainly some unusual market action. But that being said, and also that's no surprise to anybody who's followed the silver market, I think, for as long as you have. That there are these coordinated dumps and, perhaps some, as you describe it, cartels, managing the price. But all that being said, now here we sit at $62. To me, it looks like silver may be headed to the low 50s. That's sort of my base case here, given that the previous all-time highs from 1980 and 2011 were at the $50 level. We got that epic breakout last year. A retest seems in order, but what are your thoughts on that? Where do you think silver's headed now?
Yeah, first of all, the magnitude. I mean, on the scale of the correction, $35 is definitely unprecedented. But in terms of percentage decline, it was actually within the norm of previous two crashes when silver went to 50. I think in 2020, in 2011 and 1980, when silver went to 50, it came back down to the 30s within a couple of days. So that is equivalent of a 40% decline, not unlike what we witnessed in February. Mm-hmm. And it also shows that in a given day, the cartels can move the silver market wherever it wants to, given that you're dealing with guys that owns a printing press, and the digits paper loss doesn't really mean anything to them. If anything, these paper loss doesn't mean, if anything, I mean, they're backing up the truck of silver directly from the refinery to their bolts in Switzerland, and that they're paying discounted silver they're paying, using their fiat for discounted silver into their bolt in Switzerland anyway. In terms of where silver is headed, I am not as, you got to see where all things are. I don't disagree with you. There's definitely a possibility for silver to retest the $50 level. And the $50, that $51 is a very, very strong resistance, which is now support, both from historical point of view and also from volume, and from charting perspective. And earlier, I came out a couple of shows in May, in April. I had said that it's critical for silver rally to continue, that gold must stay above the 200-day moving average. So right now, that 200 moving average is, I believe, 4,300. Unfortunately, gold breached that. So that is a very bearish element. That if gold breached that, it's almost like the general, right? He's exhibiting witness, he's sick at home, having a COVID. And so silver is the little soldier there. I think silver is what in the past couple of months, gold has been weaker than silver, and that is not a good sign. And sure enough, silver is sort of late to the corrections, but now silver is correcting heavier than gold and platinum. So platinum and gold both had endured a beating, and now silver is following suit. In terms of technical, so the gold and silver both are under the 50-day and under the 200-day moving average. And to add a potential damage to the markets, you're looking at potentially a death cross of 50-day crossing the 200-day moving average on the way down. For silver, 50-day moving average is around 73, and the 200-day moving average is just below 70. And goes 50-day and 200-day are 4,300 and 4,100, somewhere around the area. So both markets are below 50-day and 200-day, and that the death cross is going to happen probably in the next 2 weeks. And then you're looking at a long weekend, July holiday, July the 1st, and also the July contracts rollover on June the 28th and 29th. So you could potentially see a washout, a climax, a correction in a panic selling sort of within the next 10 days. So probably you're going to see a intermediary bottom in the next 10 days, if the bottom is not in already today. However, there's additional problems with silver and gold as we're entering into the traditional slow seasonality. The old adage of selling May and walk away, and now we're into June, and that's typically when the boards are in the Hamptons. And so you're going to see very tepid volume, and that's not a good. That is not a good recipe for a breakout. So subsequently, I see silver right now going at around between 50 to about 85. There's not a whole lot of volume because there's not much trading record between 50 to 75. So you can easily see probably most likely scenario is 58 to 75. Between now and say September, and then at September we got to see where things are. Another caveat, and again another bearish potential bearish sign for silver is the rally of the dollar. So I am actually of the view that the dollar could go a lot higher because I was in Europe in last December. I was just in Shanghai and in Hong Kong, and they haven't recovered from COVID at all. And so the dollars, the interest rate differential for dollars is going to be becoming increasingly more favorable, having Walsh at the helm as the Fed chair, and he is a hawk. Doesn't matter how much window dressing he's talking into the role of the Fed chairman, and you could see potentially an interest rate hike as early as September. So right now the dollar has staged a rally. Last time we talked, I said I was bullish on the interest rates and bullish on dollar, and sure enough, interest rate is on the verge of breaking out, and the dollar is also strengthened in the last couple of weeks, caught the market by surprise. So that just means that there's a lot more market adjustment to come. So a higher dollar, a higher interest rates, slow seasonality, a sagging gold, none of that is doing too well for silver, and that's why earlier I said that silver should be consolidating between 70 and 90, but now I'm lowering that range bound to high 50s to low 80s because gold has breached its 200-day moving average support.
All right. Yeah, that sounds about right to me. Certainly, we have seen a significant rally in the DXY following that first FOMC with Warsh, and the market's beginning to price in potentially rate hikes throughout the remainder of the year. Also, if you look at the chart of the 30-year U.S. Treasury or even the 20-year, they look like, as you say, they are on the verge of potentially breaking higher. Now, in the event that we see higher interest rates, higher bond yields, a rising U.S. dollar, there remains sort of the quandary of the massive debts and deficit and the rising interest cost on the U.S. national debt, and also broad markets right now seem to be at nosebleed valuations by many metrics. So how do you see this ultimately playing out, right? Are higher interest rates something that the U.S. and global economy can sustain, or ultimately is the Fed going to be forced into more easing? I'd like to have your take on that.
Yeah, the least likely scenario is the easing. And but nothing is working rationally. The price discovery mechanism had long been broken, just like as silver as an example. It's the reason interest rates gone up has nothing, like in my view, has nothing to do with deficits, has nothing to do with inflation, has nothing to do with deficit spending. It's all to do with the 2030 agenda, because Treasury is a synthetic instrument. So what I mean by that, it is a paper, it's a fiat, it's a derivative of the dollar, which is a fiat abstract. And the Fed with the printing press can sustain and can set interest rates and set the Treasury price at whatever level they want through as you know, what they call the quantitative easing and quantitative tightening. So the higher interest rates are all by design to achieve the WEF 2030 agenda of own nothing and be happy. Note that, for example, right, you had a period of 2010 to 2018 where interest rates were kept artificially low at 1%, even when oil was at 120. And anytime there is a missile fire from North Korea to the Japanese Sea, is immediate rate cut. And there's a Smith of a banking credit union in California in the risk of insolvency. Again, emergency rate cut. Remember those days? And they're all long gone. And anytime there's a whiff of inflation, they say, oh, this is transitory, it's within the band of inflationary thing. And now the Fed's script are completely reversed. They're like, oh, we don't want to lower rates right now. Like they should have lowered rates already when oil was $60 right last year. And then when the economies are not doing well, GDP was low. It was time based on historical sort of matrix and benchmarks to lower rates, but they're not. And now they're hawkish, right? So, well, you know what? We got to be on guard for watching out for inflation, etc. So all the CPI and employment numbers, they're all just manufactured to support the theme. And the theme right now is higher interest rates. So we're looking at embarking on the interest rate breakout, multi-decade interest rate breakouts. And so the Fed has got the cartel has got everybody hooked on more the debt binge, the morphine, and now they're going to pull the plug on the morphines and achieve their feudalism system, the king and the peasants, by erasing the middle class and by getting into debt and jacking up the interest rates. So, you know, I came on the record and said that you're going to see 30-year mortgage taking out more than 10% but before it's said and done. And you're going to see a rapid ascent of interest rate hikes. And Walsh was selected and by design. I mean, if you watch some of his older interviews about his stance on interest rates, you'll see that he is as hawkish as you can get. So the higher interest rate is bullish for the dollar. And also I see higher oil price because US is one of the largest, if not the largest oil producer today in the world. So it is in a way a commodity currency. So it's also a buoyant for the dollar with higher oil price. And the cartels want a higher oil price, again, to help achieve the agenda of own nothing and be happy, the 2030 agenda. I am not terribly, and also like talk about price discovery. If I were to ask you, Silver Stacker, 20 years ago, that when interest rate was at 0%, that, hey, what would you think the equity market would be when interest rate is at 4.5% like we are now, right? You would have said there was a crash. But yeah, what we see is stocks at all-time high. So clearly there are some people that are not playing by the rule, meaning that they have unlimited access to credit and they're not being affected by higher yields. And these are the people, the king, that actually own the printing press. As Elon Musk discovered that he found 14 printing presses, you know, one at Social Security office and one at the Pentagon and one at whatever budget office. There's probably a couple more that's hitting some secret office are being basically printing and deterred on buying the S&P, buying the NASDAQ. And that's why you see that the power that be probably own already upwards of 90% of S&P 500, the world stock market, through proxies of Vanguard, State Street, and BlackRock. Subsequently, I don't think the equity market is going to be as much affected as people probably think. And the empirical evidence pointed such in that the rate's already more than doubled, yet you're looking at the market is taking an all-time high. You could see occasionally a dump in the market, but overall trend for the market is unquestionably up. So you're going to see higher interest rates, a higher equity market over time, higher oil price, and a very volatile gold and silver price. initially with the interest rate hikes, you're going to see a dump on the gold and silver market. And then you're going to see it then a steady resumption of a rally over time, because eventually gold and silver actually has a positive correlation to rising interest rate back in the 70s.
Interesting. Yeah, I read about those terminals that were discovered. Basically, just unlimited money creation, like leaks in the system, right? And who would police that? So that's interesting. So, sort of a scenario that you're outlining here of rules for thee, but not for me, from the rulers. And that's interesting because that would imply that regardless of where interest rates go, via the mechanism of, just endless dollar creation, we could continue to see these assets bid to new high prices. Is that to kind of summarize what you're saying? Is that what you see?
Absolutely. Absolutely. I mean, you're seeing farm prices all-time high. You're seeing equity markets are all-time high, like Japan. I was in Japan. I go to Japan frequently. Things are not doing well. And then so you can definitely see higher equity prices over time, which is what we're seeing right now. Even today, where the equity markets are down, but there is no panic on the VIX that it's just money rotation. Like the AI stocks, like the Microns are down, semiconductors are down, but the Microsoft, right, the Meta, the Googles are up. So it's just the money rotation between one end to the other, but it's all being backstopped by the cartel, by the power that be. Remember also back in the days of what they call the plunge protection team. I mean, you have to wonder, right? Who is accumulating the position? Who is actually owning those stocks are being bought in the open market? And every time there is a sort of a clear breach of support at the 200-day moving average, and all of a sudden you see invisible hand that showed up in supporting the market. And also, I mean, on the opposite end, every time when the metals market or the oil market right now looking to break out, and then you see the invisible hand whacking the market. When I say the higher oil price is the WEF wants oil price, but in the short term, Trump is fighting for his survival. So every now and then you're going to see a dichotomy or a pushback from the conspicuous, the apparent power, right, versus the shadow power. And that's what we see right now. The shadow power want higher oil price, and they're bombing Russian refineries and ports, and they're staging the Ukraine frontier. But it seemed like Trump gave the green light to go after Iran and Venezuela and Cuba, because Trump was promised it's a 3-day affair with the overthrow of regime. But then it turned out that it's not as easy. It doesn't turn out to be the case for Iran. So I think Trump is having a second thought. It's yet to be seen whether the Orange Man has enough will, right, to actually act in defiance of the shadow power that be. And so we're treading some very treacherous waters because last president that acted defiant, as you know, was JFK. We're going to see some resolution very soon on the Iranian fronts. The drama has not ended. The script has not been concluded.
Yeah, I want to delve a bit into oil and get your take on that. But I think it's interesting what you say here, for lack of a better word, maybe for those who are of a conspiratorial mind, I think it's important to note that, like you say, there probably is more at work behind the scenes than what we see, like obviously, but it doesn't mean that everybody's kind of on the same page, right? So it's sort of an emergent system with all these different powers vying for, their own individual agendas. Oil is an interesting market. I mean, right now I'm looking at the chart of Brent crude oil, and we're almost to pre-war levels. Not quite there yet, but I mean, it's pretty remarkable because from my point of view, it seems that for all the headlines that we see about a peace deal and a resolution and the opening of the Strait of Hormuz, it doesn't seem like we're anywhere near pre-war levels of shipping through the world's most vital energy choke point there. Last I saw was that maybe we were up to 35 vessels a day, but likely insurance premiums remain extremely elevated. There's always the possibility of renewed conflict there. And, some will say, well, Iran isn't capable of shutting the strait. Well, to that, I would say, why was it shut for, 100+ days? And even if we can transit ships through, the use of military escorts and everything, that becomes very expensive oil when you're requiring, an aircraft carrier to get the ships through. So my question to you is the recent action, which just seems completely, counterintuitive in oil, the correction to these prices. Uh, Again, looking at the chart, the Brent crude, the RSI is under 30. It's at 27
Yes,
right now. So it's, extremely
yes.
oversold. We still seem to be running through the Strategic Petroleum Reserve at a record pace. Commercial reserves globally are down. How do you see oil moving forward? I mean, to me, it seems like we may be on track for a reckoning here between the physical and the paper markets, but I'd love to get your take on this.
I lost money on oil. I became interested in oil earlier this year when oil was $50. And the reason was that, just looking at the ratio, like historically gold to oil ratio is 10, which means that when gold was 4,000 earlier this year, then oil got to be 400, right? And also there's not been many occasions where silver where silver is trading above oil, and at times silver is trading at almost doubling the price of oil in February. And and the reason I become interested in oil because of AI that these consume a lot of oil and energy, and oil is energy. Barring all that, to answer your question, that's why I got in. So it seemed like fundamentally oil was a no-brainer when we went very heavy into oil, or even me personally, and lost quite a lot of money. What the oil investor is experiencing now is not different from what silver stackers have been enduring in the last 20 years. They're doing exactly what they're doing on oil market as they did to all the silver market. So the fundamentals, I mean, we don't need to so rehearse on the fundamentals on silver. You just did the fundamentals on gold, on oil, right? So when the Strait of Hormuz was shut, it's almost like 20, it's not almost, it's 20% of the oil production was withdrawn from the market. So can you imagine like Penasquitos and Grasberg and some of the larger, like top 5 of largest silver, like that would be the equivalent of Mexico, the entire Mexican going on strike for silver market, or the entire Peruvian silver mines, right? Like the miners union going on strike. You would see immediate spike on silver, and or in the case of oil. And also historically, when the Saudis imposed an oil embargo back in the 80s, you see oil went from like $10 to $40. And also when the first missile was fired in Ukraine and Russia, I recall, like I'm not a sort of super oil bug, but I believe oil went from like 70 to 100 and stayed there for like a couple of weeks. So what you see here today, and then all the oil analysts that Jeff Corey, they all had forecast the oil price logically, even including the likes of Goldman Sachs and even the likes of Chevron and ExxonMobil. They're saying like oil is going to go to 150, and so and the fundamentals support such. But the problem is, you look at the technicals, right? The technical pointed to the consolidation and then higher and the lower high and lower lows, which is a very bearish sign. So what's happened is the administration is using the exact same tactics to suppress oil as they did with silver. So how many times they talked about the deal is imminent, right? 37 times. That's just like saying that that is the same as employment number is ADP, job numbers are high to jack up the dollar on a long weekend, or the CPI numbers are low. So again, to jack up the dollar. So like what they're doing is exactly what they did for silver. And then the Fed, the U.S. Treasury, is acting in concert with the Japanese to release well over 100 million barrels of strategic oil reserves. So this is no different from Gordon Brown dropped the gold in Bank of England's gold back in 2000 when oil was at when gold was at 250, or the Nixon closed the gold window at $35, and which makes you ponder, right? If the gold in Fort Knox is still there. I mean, if they would sell like strategic oil reserve, oil is critical to day-to-day living. Probably Nixon has somebody had Nixon's a year, and maybe the gold at Fort Knox are being swapped with the gold at the German central bank, the Bundesbank. and then the European gold was flushed into the market, and then the gold in Fort Knox, if it's still there, actually belong to the Germans and not to the Americans anymore. However, just a couple of minutes in that. Right now, there is still about 1 billion to 2 billion barrels of oil in various strategic and private tanks. But keep in mind, though, that you need about 1 billion barrels of oil to fill the pipes and to keep the tank pressure ongoing, right? So it's not like you can extract every barrel of oil that is in reserve. So we are dangerously running to that point of a complete collapse of the market. And the world is running a deficit at around 10 million barrels, or 5 to 10 million barrels a day. So you're running at this rate, you're looking at another depletion of close to 500 million barrels if Hormuz were to stay the status quo into July. And then you're going to see the day of reckoning, not like COVID days. What happened in COVID when oil went negative from $30 a day, went down $30, is that when the reservoir in Cushing, Oklahoma, which is what the futures traded, it's like the vault for gold, right? In the COMEX. So what happened is when the tank is full, anybody who is holding a long oil contract has to sell. So all of a sudden it becomes like the tank's overflowing, and there's no way to so it's a situation where that's why oil went to negative, and that's why people were holding on to the belief that when tanks run dry and then people need oil, they're going to be bidding for whatever oil that's available, and then anybody who's cutting short in the market will have to cover at exorbitant prices, just like the longs will have to sell at a negative price in COVID days. We'll see what happens. We don't know, and that's why I'm still long oil.
Yeah, I'm in the same boat as you, down on those positions, but I am maintaining those long positions because, as you say, if you see oil plummet negatively when the tanks fill up, it would be logical to assume you would see the inverse when the tanks are completely run dry. And I also saw Zero Hedge ran a piece that Brent crude short positions are at an all-time record high, which it would explain, I suppose, some of the price action that we've seen. But also, it seems like you combine that with the limited supply situation and the potential supply shock. It seems like a recipe for a massive short squeeze. I mean, I suppose time will tell, how well the market manipulators can suppress the price. But I would not want to initiate a short position here. Let me put it that way. That would make me a little anxious, I think. All right. So John, I do really love hearing all of your takes on the global markets, silver, oil. I know there's another metal that you discussed with us last time, which you are actively involved with, Fluorspar. Give us a little rundown on that and your involvement in that space.
Yeah, I want to say on the oil market, in addition to the paper shorts on the Brent, you also have there's 1 billion barrels of oil that came out of the reserves from various different strategic stockpile. So that has to be replenished, right? Mm-hmm. And if anything, the countries like England and Australia, which has really no, or Australia or many Southeast Asian countries like Thailand, Cambodia, Vietnam, that really has no, days or maybe a week or two worth only of oil reserve, a strategic reserve. We'll be thinking about building one. So then you add on that another floor in terms of the tanks have to be filled up, the reserve has to be built back up. Certainly, and then technically, oil $72 is the 200-day moving average. So I think it's going to take a bit of a good amount of smacking if the cartel choose to try to get it down below 70, which I probably don't think is going to be the case. And also, as the Middle East situation sort of come to a status quo, meaning that if people are sure that the missile are not going to fly anymore, then there's a lot of oil money that's being on the sideline that don't want to play the geopolitics and they stay on the sideline, and then they will be rotating back into their positions. Now, we talked about Fluorspar back in last July when CleanTech, of which I am the CEO, along with being CEO of Silver Elephant, embarked on this Fluorspar initiative. I think back then I recommended taking a look at our company. The stock was trading at 5 cents, and 4 months later it went to 50 cents. So it was a 15-bagger. Fluorspar is all about energy production and energy storage. 6 fluorine atoms is required to enrich 1 uranium. So when you take uranium out of the ground, I'm sure you probably have people uranium bugs in your audience as well, that you need to marry uranium with the yellow cake, with the fluorspar to levitate and gasify the uranium. And from there, the uranium is then go through the centrifugal process, which is kind of like imagine your laundry dryer, to spin out the U-235, the lighter fissile uranium from the U-238. So U-235 is the nuclear fuel. And then in terms of energy storage, it's a hot topic nowadays. And China is building tens of gigawatts of these batteries in order to power their own AI initiative. 6 fluorine atoms is required to marry to a lithium ion for the ion to be mobile, to swim across the cathode and the anode. And that's what the battery is. So imagine the cathode and the anodes are like iron and graphite, right, on both ends of a swimming pool. But the actual water, the salt, is fluorine phosphate to be married with the lithium. And lithium, you think of lithium as the swimmers in the swimming pool, that's swimming back and forth. So fluorspar price has gone up 50% in the last 2 years because China is turning into a net importer. And then almost entire growth in fluorspar demand is attributed to, as I mentioned, the energy production in nuclear enrichment and the energy storage in energy and in batteries. You're seeing a lot of news nowadays. Data centers, yeah, in Carolinas, in Georgia, in Texas, in Utah. They're talking about building I think a 15 gigawatt data center in Texas, and then talking about building ones in Nevada near Lake Tahoe. These data centers are consuming gigawatts of power. That's equivalent of 5 nuclear power plants. That's how big they are. And they're consuming billions of gallons of water, and that's why they're sucking the river dry. It's all well documented. And unfortunately, you're not going to be able to turn on a nuclear power plant every other year. You're going to need like 5 every year to accommodate the growth of AI. And the only way you can do that is build solar panels and marry that with the batteries. And it's a bit surprising, and well, in a way, but not too much, that the North American investors are always late to the game. A case and example, right? NVIDIA has been trading $3 trillion in the last 2.5 years. Then all of a sudden you see Micron bumped 500% to $1 trillion today, just in the last 9 months. You'd have thought that the logical investor who believed in AI and bought up NVIDIA 3 years ago would have foreseen that once you put the chips in and once you build the data centers, you're going to need the memory, right? And sure enough, now we're going into memory frenzy. And in a couple of years, you're going to go into the power frenzy, like the Jeff Bezos and the Elon Musk and the BlackRock Larry Fink already predicted that the power is actually the bottleneck. And when people come to that realization and the power crunch come to front and center, that's when the fluorspar narrative is going to really explode and go parabolic and hyperbolic. And it's not going to be too long. I would say probably in the next 18 months. And so for some of your audience who's come into CleanTech back in July last year, had made out very well. But for those people who's looking to maybe to get into the fluorspar space, CleanTech right now trading at around 15 cents represent a great entry point because of overlap of silver and critical minerals investors. So when in a way that the fluorspar mining companies are being thrown into the bath, along with gold and silver mining stocks.
Yeah, it seems like the critical minerals, the supply chains are not going to get any better here, and the demand is likely to continue increasing. So certainly something that a resource sector investor would be interested in checking out. And as far as hearing more from you, John, whether it be Silver Elephant or CleanTech or just your market commentary, where can viewers go to find more of you?
Right. You can always go to Twitter. Just search John Lee CleanTech Vanadium. You will find my there. You can DM me, and then I check Twitter quite often. If I may spend a couple of minutes, just expand on AI a little bit. Last time we talked about
Yes.
AI that is replacing the jobs of taxi drivers, and also replacing the jobs of women. Like if you go to South America, I don't know if you travel to South America, right? Probably 20% of the male population are taxi drivers, and 30% of the female population are running a supermarket, groceries, and waitressing on restaurants, etc. All those jobs will be gone. Like I was just in Marriott Hotel in Shanghai, and my breakfast is made by a robot. It's not just coffee; they're making noodles, and all the hallways have these robots running around. That's do self cleaning, and just 2 months ago, you have a robot marathon. So robotics can already do marathon and then practice kung fu and dancing in ballets today. In 3 years' time, you're going to see a massive penetration of robotics into ordinary day-to-day home. These robots are going to be selling for a price of a Tesla, $20,000-$30,000, and they will clean the house for you. They will do your laundry. They will talk to you when you're bored. They will cook for you. They will clean for you. They will run errands for you. They will be an answering machine for you. They will send you reminders. Maybe even do some of the basic chores, sound the alarm, doing ChatGPT. They will do the encyclopedia. I mean, essentially what's happening, let me put it in another easy way, is what we're happening is that human population today is only at around 3 billion. There's been a decline of human population. We're not even anywhere near 7. We're close to 3 to 5. In 3 to 5 years' time, you're going to see over 1 billion robots roaming around doing chores, okay? And these robots need batteries. And these robots are connected by satellites, by SpaceX, and they're run by energy storage. They can swap batteries. They're doing 24/7. Like all the data centers and the warehouses, Amazon is handled and sorted by robots. They're going to deliver your package. All the mining operation in the future is going to be done robots, like being remote controlled by guys that are in air conditioned fancy houses, right? And linked through satellite. And they could be mining in the Sahara Desert for oil or for copper in Pakistan, for example.
Mm-hmm.
So what we see is the absolute infancy of this AI revolution that's going beyond just a ChatGPT. However, there is a marriage of the body, which is robots, and the brain, which is NVIDIA chips. The memory is Micron, and the thinking, right? The processing is the software model in Anthropic, in DeepSeek, and in OpenAI. And what that's called what these robot human eat is energy. So in a way, if you were thinking about investing in McDonald's, right, 100 years ago, because you believe there's going to be an explosion of human population, you got to invest in the food industry. You bet McDonald's 100 years ago at $2, you cash it out at 200. Now it's the time to get into the energy market, oil, gas, nuclear, solar panels, batteries, the whole 9 yards. Like silver is going to be between 60 and 90 for the rest of this year, in my view, or even into next year. I think the chance of gold silver breaking out 90 is tough. Just looking at what happened before when silver went above 50 and went back down. But there is an incredible renaissance that has been completely overlooked, which is the energy market to feed the robots. These are the food to the robots, right? So now you have the food for the robots, and then you have the brain, which is in chips, and you have the memory that's Micron, and you have the software model that's Anthropic. Guess what else you need? You need the eyes, vision. Vision is to do with germanium. Germanium is the critical mineral that will translate the frequency into digital signals, kind of how your I process. And we figured that out because germanium right now is traded from $20 an ounce. You know what germanium is trading today? $240 an ounce. It went up 10 times in the last 6 years. The world cannot do without germanium. And interestingly, this Fluorspar District has a big chunk of germanium. So what we have done is, as CleanTech has optioned off the germanium projects to Silver Elephant, of which some of your audience might know. And so Silver Elephant is embarking on this massive germanium drive that also has a bit of silver. Germanium is linked to silver, and as well as zinc and lead, right? It's sphalerite. So I highly recommend your audience to check out germanium. The buzz is real, and that's why the U.S. government is spending $7 billion to build a processing plant by the U.S. Exim Bank, Department of Commerce, and the Department of War to build a $7 billion processing refinery plant, smelting plant, right next to 70 miles from where we are in the Fluorspar District, in order to harness the germanium in the district. It's a shocker, and people are sleeping. That's why I'm coming on your program, insisting on coming on your program, pounding my chest again, that if you have $1, where would you go? I would say 50 cents CleanTech to produce the food, to feed the robotics, and then 50 cents to Silver Elephant to create the vision for those robots. And that's my
Interesting. Yeah, that could be kind of the hidden AI play that markets are still sleeping on. So for those who feel as though they've maybe missed the boat on the tech stocks, maybe this is the way to get exposure. Interesting. All right, John. Well, always a pleasure to speak with you, sir. I look forward to having you again on the channel, and there will be some links in the description for anyone who would like to check out more of John's work or John's companies. And with that being said, thank you very much, John. It's always a pleasure. Appreciate you coming on today and sharing your insights with myself and the audience.
The pleasure is mine. Thank you.